If you think you know which way the U.S.-China trade talks are going, you might want to put that intuition to work in the stock market because investors don't seem to have a clue. On Friday, May 9th, President Trump tweeted there would be additional tariffs on China. In the aftermath, the Chinese delayed coming to the U.S. for talks, then came anyway. Delayed announcing retaliation, then retaliated anyway, but not too much. And Donald Trump, at one point, said he would put even more tariffs on China, and at another point mentioned an encouraging letter he had received from the President of China. And the stock market just kept bouncing around, trying to decide just how bad the news was. Terrible or a little bit bad? Couldn't make up its mind. Now that's understandable. There hasn't been much detail released about the negotiations, and a sudden change in direction, well, it's unnerving. Plus, so far the trade war has been more bark than bite, although don't mention that to the farmers who've been hit hard by retaliatory tariffs. But overall, the impact has been fairly narrow and hasn't made a huge dent in the economy. But that could change. At least it sounds like it could, based on this latest round of back and forth between the U.S. and China. In the interest of gaining some perspective, we're going to do a quick rundown of best and worst case scenarios as the trade conflict between the world's two largest economies possibly stands at the brink of a serious change in direction. This is Dan Joseph with the China Learning Curve. Thanks for watching the latest in our Trade War Dashboard video series. When we look at the latest developments, the new tariffs, the counter tariffs, the suggestion that China reneged on its promises, the best case scenario, the happy ending, is that this is a bump in the road, a negotiating tactic, delaying an agreement but not derailing it. We end up with, at the very least, a decent agreement that allows for continued growth and cooperation between the U.S. and China, in which case we'll likely see an economic boost as clarity and confidence returns to business, and cross-border investment likely increases. Now that might be the most likely scenario, but it isn't the only possibility. Here's the other end, the downside, the worst case scenario. Maybe the Chinese don't budge in the negotiations, refuse to return to the positions that the U.S. says they had at one point agreed to. In that case, we will likely see Donald Trump follow through on his threat to place a tariff on basically everything China sells to the U.S. Now, almost certainly, China would react in kind using tariffs and non-tariff measures to apply pressure to American companies, not only those exporting to China, but those doing business there as well. Talks would collapse, and we'd find ourselves in an all-out tariff war, at which point the whole trade war thing will finally have a bite to match its bark. Now, some economists estimate there could be as much as a 0.5% hit to U.S. GDP growth, maybe 1.5% in China, both very big numbers, accompanied by job losses, lost income, that type of thing. Now, it's hard to say exactly what the impact will be, but we would be talking about serious disruption to the two largest economies in the world. The ripple effect could throw some countries into recession. Plus, there could be spillover effects with other aspects of the U.S.-China relationship, simply due to increased tensions. Think of the South China Sea. We might even see some tension with allies, as they might want to continue to engage China even as the U.S. disengages. End of the world? Maybe not. But probably not just a speed bump either. So which scenario is more likely? Well, there's no doubt both sides would like to avoid short-term economic pain. China's economy has been weakening, mostly due to over-reliance on debt, but to a lesser extent because of the trade war. It's in their interest to get past it. The U.S. economy has been doing relatively well, but there's a chance that ratcheting up trade tensions could curtail growth, and Donald Trump seems anxious to keep the growth going. So if you had to, you'd probably say that this rosy scenario, the happy ending, is the most likely one, because no one wants to knock their own economy off track. But don't get too optimistic, because there are definitely reasons why the worst case scenario could also happen. Let's start with China. In China, those opposed to continued reform have been gaining clout for many years. Plus, there's a general sense in China that America wants to contain China, and that the tariff war is just an excuse. At the same time, the U.S. is not having much success convincing countries to exclude Chinese company Huawei from their 5G networks, and China is receiving a mostly favorable reaction from the world relative to its One Belt, One Road infrastructure initiative, both of which could embolden China to resist U.S. pressure, thinking they can rely on the rest of the world. All of the above could lead to China actually hardening its position, as opposed to moving back to a position that the U.S. side would accept. Given Donald Trump's fondness for tariffs, remember, he said many times he thinks they're good for the economy, and the fact that Trump is, let's face it, a hardball negotiator, if China digs in, I'd say it is almost automatic that the U.S. will apply maximum tariffs on China, in which case I think we could expect maximum retaliation from China, at which point we would have, voila, the worst case scenario, an all-out trade war. Of course, none of this analysis says anything about the quality of a potential deal that might be reached. We don't have enough visibility into the terms to make that assessment. If we reach a quick deal, No doubt some will say we settled for a bad deal. If we ride into trade Armageddon, worst case scenario, there'll be some who say it's worth it. And maybe they'll be right, but we can't have an opinion on that now because we don't know enough about the proposed deal. I'm certainly not trying to be Chicken Little here. I'm not saying certain doom is right around the corner. If I were making odds, I'd say the more rosy scenario is the more likely. But a trade storm, an all-out, bare-knuckled trade brawl, it's not out of the question. The seeds are there. Both sides would have their reasons. Both sides would feel justified in their actions. And that might be all it takes to send the U.S.-China trade talks toward the worst-case scenario. Maybe the market's right. Maybe there is something to worry about. This is Dan Joseph with the China Learning Curve. Thanks for watching.